Welcome to the Mentor Podcast, where the most highly motivated entrepreneurs come to get their weekly dose of financial stability with host Ron LeGrand, as well as other nationally recognized thought leaders who will teach you how to get, grow, and protect your wealth.
Well, hello, everybody. This is Ron LeGrand, and welcome to another edition to the Mentor Podcast, where our objective is to help you make more money, keep more of it, enjoy it while you have it, and protect it, and make sure it passes to the right folks when you're not around anymore. My guest today is Mike Powell, who happens to be in the money business. We thought you might be interested in money, so we asked Mike to come on, and he's an expert in raising private capital, and I don't know anybody that knows more about Mike than Mike, so welcome, sir, and tell us what you do and who you are, please.
All right, my name is Mike Powell. I live in San Antonio, Texas, and we buy somewhere around 100 houses a year, at least we try to, and we fund all those deals initially, at least with private money given by obviously private people, and use what's called OPM, other people's money, to make it all happen.
Okay. All right. Well, about how much of this private money do you personally borrow every year, Mike?
Well, right now in our portfolio, we've got around $12 million in private money.
Okay. And when you borrow this money, is your purpose to borrow it to buy the house to rehab it and then retail it? Or do you buy it and keep it a while and put tenants in it? Or what is it you do?
Well, we've actually been fortunate enough to use, because we can get the private money we're able to use that money in a number of different ways. We buy it to retail it. We buy it to hold it. We buy it to, we even take down some that we would wholesale and take them down and wholesale them. We use it for all of the above.
Okay. Might want to define wholesale for me in case our audience don't know what that means.
Well, wholesale is we go look at a property and it's pretty good, and we think we can probably, instead of wholesaling it and flipping the contract, take it down and not do anything to it, put it on the MLS and have a realtor buy it for a higher price than we could wholesale it for.
You mean a realtor sell it probably to owner occupants? Is that what you're saying?
Either owner occupants or a lot of times it's investors from out of the city or out of the state who aren't here to get in with all the wholesalers. They use realtors.
Mm-hmm. And they probably are paying more than they should, but you're not going to let them know that, are you, Mike?
They pay a premium, and that is up to them to pay that premium.
You are correct. In fact, there's a lot of hedge funds out there that don't care.
I've had hedge funds buy some of those at 90 cents on the dollar from me. So that's why the private money for it's so important.
So the word wholesale means closer to retail than wholesale is what you're trying to say. And
well, the reason we call it wholesale is because we don't put any work into it at all. We buy it with private money and we stick it on the MLS.
The reason you call it wholesale, sir, is because that's a word I invented about 20 years ago.
You are the man.
You're just not aware of that. Okay. So the point is.
Well, now I can tell everybody where it comes from, because everybody asks me where I got that from.
Well, yeah. I'm just the oldest. That's all. But that is true. That is something I created. But the point is, you're not selling it to what we would traditionally sell them at wholesale prices to investors, because investors want to buy them too cheap. I know. And I'm one of them and you're one of them, and that's okay. But there's a big market out there. As long as we give them a discount, it don't have to be a discount like most investors would perceive it to be. Exactly. So you buy and fund these things for yourself. Do you fund these things for other people?
We do. We've been able to get so much private money. We started relending it back out to hard money because we couldn't use up all the private money. We couldn't buy enough to use it all up. So we borrow it and then from private money, give the people first lien on the property, and then we wrap it and put it back out at a higher price.
So therefore, your path is exactly like mine was when I started. It took me 3 years to figure out I didn't have to go to the mortgage broker to get the money. I could get it myself. And next thing you know, I have more than I could possibly use. So I got me a license and I started lending it out as well and collecting a fee for doing so.
It's so hard to buy any kind of deal in slow motion. Having this money available for these flippers is excellent,
Yeah. Okay. So I guess my question was, do you actually make loans for other folks, not just sell them houses?
Yes, we do.
Are you a mortgage broker?
No, we lend hard money to investments only.
Okay. So you are a lender, not just a buy and seller of houses.
Correct.
All right. when you lend, you want to tell us what your terms are?
Sure. It's 3 points and 13.9%, and it could go up from there. We've gotten up to 4 or 5 points with a higher percentage, depending on how we feel about the property and the person.
And what loan to value ratio?
We are 70 or 65% or below. If they want to borrow anything more than that, they need to put their own cash into it. We will not lend them more than 65%.
Okay, and that's 65% of the purchase price or of the ARV?
Of the ARV.
Okay.
The actual value.
As long as I borrow below 65%, I can come to you and get all the money.
Yes, you can, but we do it in draws like anybody else. We're not going to give everybody the big chunk of money and hope they finish it, you know?
You're not? Come on, Mike. Don't you trust them?
I'd be broke very soon if I did that.
Sometime I'll tell you about the rule of 78 when I actually broke my own rule and started giving people money in advance to do the work against my own darn policies, and literally had to take 78 properties back over a period of 2 years from one entity that I was making loans to.
Wow.
That's how we learn all this stuff.
That's right.
As a mortgage broker, I wasn't personally liable for the debt, but I wanted to protect my lenders, so I did all the work to take them all back, and it was a mess.
Well, and
anyway,
that's
what happens.
I'm never personally liable for this debt. We sign
no.
Yeah, we're never personally liable for the debt we're talking about today.
All right. So you get money from private investors, and then you lend it out, and you get points, and they get the interest. That's about the size of it, right?
Yes. Well, we keep a little bit of the interest because we borrowed at a lower interest, and so we keep about 6% of that interest.
I got you. So you're borrowing at a lower interest and keeping the spread as well.
Yes.
And 65%, sir, is the loan to value ratio that I would never exceed as well. And frankly, on the really cheap ones, I wouldn't go above 60. So you got the plan. All right. What do you think the biggest obstacle for people to raise money that don't want to come to you? And by the way, just so you're clear, Mike, I tell them, let's avoid the loan sharks and go get the money ourselves.
Absolutely. I tell people that all the time, but some people just won't do it.
Well, I know. And the hardest part is getting started, isn't it?
It is. And, you're asking the biggest obstacle for anybody, and tell me what you think, Ron, but the biggest obstacle I've come across with people and people I've taught is getting them to understand that you borrowing money is not about you, it's about the asset.
That's correct.
Everybody comes to me and says, well, I've never done a deal, or I've never, I'm too young, or I don't know anybody with money, all these obstacles, but it's not about any of that. It's about what are you going to get? What collateral are you going to give them? Yeah.
So in other words, if I give them collateral and I don't borrow more than 65% of its value, the lender's not going to sit around and worry about whether I'm going to pay. They're probably going to hope I don't, because they're going
absolutely.
To get the
and a lot of times we go to people with 55% deals, and I bet they're praying they're going to get hit by a bus.
Yeah, there you go. And so when somebody borrows money from you, do you check their credit, and does it have anything to do with credit?
Absolutely. We check credit and we check the background just to kind of know what kind of person they are, but it doesn't mean we will not lend on it, because sometimes, they've found a great deal. And so we'll lend to them and knowing that, hey, we might get this one back based off of his credit and background. But if we do, we're at 60% value. So we'd be happy to take that project over.
Sure. And I would imagine that with a little track record behind them, that your rules can change a little bit as well once you get to know them and believe they're going to do what they say, right?
Absolutely.
Well, for your information, I lent out at 15% interest and 5 points for 15 years and did over 3,000 of those loans that you just described.
Wow.
And I got 3 months interest prepayment penalty on top of that. So if anybody listening thinks that your rate is high, they haven't figured out yet that it's not the cost of money, it's the availability of it.
That's right. I mean, it really doesn't matter what the cost of the money is if you have a 50% deal and you can turn it quickly. What does it matter what the cost of the money is?
Especially when it's such a short-term deal.
Exactly.
But when I started, Mike, you may not even know this, I didn't have any credit, and I had the same apprehensions that most people have when they come in. I found a mortgage broker that would lend me the money at 60% LTV, 18% interest, 10 points, and 6 months interest prepayment penalty.
Wow. That's incredible. And you're still making money on top of it.
And because it didn't take me long to figure out that guy was cheaper than a partner.
Yeah, because what
And
happens with the partners is they take half. So I can almost
yeah,
guarantee you any percentage rate is better than half.
but it gave me the peace of mind to know that if I went out and found the deal, I didn't have to worry where the money is coming from. And it took me 3 years. I got tired of paying those kind of premiums. So after 3 years, I started asking for my own money. And gosh, I only did it 76 times before I got smart and started asking for my own. But I made money on every single one of them.
Well, and you say how important it is. Everybody asks me how we do the volume we do and how we do the quality we do, and it's all based on the private money. I'd be much more nervous about signing up as many houses as we do if we didn't have the private money. Those points up front, 100 houses would kill you.
Do you find your deals from the MLS and from FSBOs or both?
We do get deals from both. I bought one off MLS last Friday. FSBOs, we buy a couple of those a year, and then we do a lot of marketing on our own.
Well, you do a lot of marketing to FSBOs, you mean?
Yes, yes, exactly.
Yeah, okay. All right, so when I guess we've already discussed what you do. So how do people reach you if they want to borrow money from you, and where do you lend to? What area do you lend in?
So we only lend here in Central Texas because we don't like to take our private monies people out elsewhere because we don't necessarily know all the laws everywhere else. So we lend here in Central Texas. And
I did the same.
And we just feel more comfortable doing it that way. Right. Even though we don't have we're not signing for this money, we're not personally liable for our money, we still are consciously liable for it. And so we do what we feel is comfortable.
Exactly like I did. I only made loans where I live. So when I had to go fix them, I didn't have to go far. You probably don't even know this, Mike, but you probably learned this business indirectly from me because you sound like me, man.
Well,
all right.
I would imagine I did. I learned it from I learned a lot of this business from a student that was really big on you, and I'm sure he learned a lot of it, or almost all of it, from you.
Yeah. Well, okay. Well, let's don't bring his name up here because he didn't give us permission. But
absolutely.
All right, look, we've talked about what you do, and since you're only going to be applicable to people in Central Texas, that means most of the people listening are not going to be able to get money from you. So let's say I don't have a mic, or I don't know a mic, and I don't want a mic. What would you suggest people do to get their own private money?
Well, so we actually sell a course on it, and it gives you everything from start to end, what to do, all that kind of stuff. But the number one thing people need to do is get rid of their limiting belief when it comes to borrowing money from people. And what I say by limiting belief is when I started this, I would go out and try to get private money, and I wasn't believing in myself and my age on the deals I was bringing. I was 24, 25 years old talking to 60, 70, 80-year-old retired businessmen who had done well for themselves and kept thinking nobody's going to loan a 24-year-old money on a house when he lives in a one-bedroom apartment.
Yeah.
So the first thing people need to do is get rid of their limiting belief to move forward.
So really what you're saying is that we are not begging for money. We are actually offering the lender an opportunity they won't get anywhere else, and that most people don't know exists, which is a private loan secured by a 65% loan-to-value mortgage on a house recorded downtown on an asset that's not going anywhere.
Absolutely, and that sums it up 100% right there. If I'm not going to beg anybody for money, I like people to be calling me asking how fast I can get it out.
And that's exactly the way we teach. It's not about, well, what will you do for me? What do I have to do to meet your needs, Mr. Lender? It's here's the way I want to borrow the money. Here's the way what I'm willing to pay. And if those rules don't apply to you, I wish I could help you, but I'll have to move on. And that is an attitude change. And I know it's easy for us to talk about it, but somebody coming into this business that's just borrowing money for the first time feels like they're begging. And begging is the worst thing you can do.
It absolutely does. And it's funny because I had met with probably 8 to 12 people about private money. I had borrowed from friends and family quite a bit. And burnt through everybody I knew that had money. I bought 28 houses my first year and had burnt through all the money. So I had to start getting people that weren't my warm market and try to work on all those people.
Yeah. So you run out of money with your family, which didn't take long.
No.
Now you had to get out into the real world, huh?
Yeah, the family was the easy one, but then you get out in the real world, and I had made 8 to 10, maybe 12, meetings with people, and I'd gotten so many no's. I met with that last person, and when they said yes, I was about to say, well, thank you for your time. I'll move on. But he said yes, and it took me by surprise. I almost didn't know what to do.
Yeah. Well, and I'm guessing that when you were beginning, you were begging too, and it was all over your voice, and the other side could pick it up, which is a big mistake almost everybody makes coming into this business, whether you're calling lenders or whether you're calling sellers.
You got to go in there like you've been doing it for years, and you are there to help them.
Right. And you are. What are you paying? About 8% on your money?
We pay anywhere from 6 to 10, depending on the person. 10 for family, and 6 if I'm into a property for less than 50%. I feel like I should only have to pay 6% return because they're so safe.
Well, 6% is 12 times more than they're getting in their bank account.
Absolutely.
So it's not a hard sale, is it?
No, especially my target market is people who don't want to watch the ticker tape. They have a lump sum of money and they want to know what their return is going to be. And with us,
right.
it's an exact return. And fixed. And they don't want to have to watch the ticker tape and wonder if they're going to run out of money before they pass away. So usually our people are retired or getting close to retirement. And they want that more for sure thing than what the stock market can give them.
And when the stock market crashes again, your people are still getting 8% interest.
Exactly.
And they know exactly what they're getting and how long they're going to get it. And not many investments you can say that about.
Well, and it was funny. I met with a gentleman a couple weeks ago, and he said, I came back to you because I went and sat down with my stockbroker, and my stockbroker said, over a 15-year term, we're going to shoot to try to hit you at 6% average over that 15-year term. And he said, and I came back to you because you were at 7.
I would rather tell him I'd rather have 0 because that's an insult.
Well, he did my sales job for me. I'd met with him twice and he never came back. And then all of a sudden he popped up ready to lend $300,000.
There you go. All right. And you know what? There's no law that says you can't give your lenders a little premium when you get cashed out either.
No, not at all. And we do that all the time.
Yeah. Throw an extra $500 at them. What do you care? You just made 25, 30 grand. Take care of the people who take care of you and watch how fast they'll come back to you. In fact, the truth is, and you learned this, I know you did, same as I did. They don't want the money back. In fact, that's the last thing they want. Well, they want the money. They want it to stay out.
Did you ever have somebody where you get their money and then after about 6 months, I go, you know what? Because we do a lot of buy and hold. I say, you know what? Let's cash them out with somebody else and show them that the money does come back. And as soon as we do that, like, hey, I got my money back. This is the real deal. Hey, I want to do 2 now.
Yeah.
What can you do with this amount?
In fact, that brings up a couple of good points. Number one, you do want to get them paid off as fast as you can, even if you have to take money from another private lender to pay off this loan, just so your guy can see that money coming back, especially if there's a spoof at the end of it. But secondly, you got to, when somebody says, I want to get some money out, you better make sure you get their money out pretty quick or they're going to find another place for it, which is one reason to pay off another loan with this loan.
Well, and if they go find another place, it's probably you're never going to see that money again because they lent it to, their nephew John in Alaska who's doing a snow cone place,
or put it in the stock market,
or put it in the stock market. So you're exactly right. We try to get it as soon as we can. As soon as somebody tells us we're getting their money out because we do not want them to lose it before we get a hold of it.
Mike, when you borrow money to do rehabs, I assume you're borrowing it without monthly payments on it.
Correct. We do it a number of ways. A lot of times on a rehab, we do it without monthly payment. And they get a check when we close.
Right, for the principal and the accrued interest.
Correct.
And I found they'd rather have it that way because they don't want to mess with that monthly payment.
You're exactly right. And one thing we do is we give them 2 separate checks so that they know what they can go spend again and what their original.
That's a good idea.
So that way they say, okay, I need to put this 150 back out, but I can spend this $5,000 here.
Yeah, that's good. Then they don't have to do any calculating, do they?
Nope.
So Tell us how. See, you said you had a course on this stuff. Tell me a little bit about that and where our people can learn more about it. We're not selling courses on this podcast, but there's probably a place they can go to learn about it, is there not?
They can. It's thementorpodcast.com/PMCE. And
say it again.
Okay, it's thementorpodcast.com/PMCE.
Now, it's the Mentor Podcast, folks. Don't forget the mentorpodcast.com/PMCE.
Yes.
All right. And is there something there they can get for free, Mike?
There is. They can download a webinar on it and kind of see what, and I'm sure on the website there it's got everything that comes with the course. Spent a lot of time really trying to think about and put down what helped us the most, different experiences we've had, troubles other people have had. We've got a lot of good content on how when you do get ready to go start getting your loans, the paperwork we use, how to use that paperwork, all that kind of stuff. All kinds of bonus stuff. We even paid an actor to go through what a meeting with private money people is like.
Well, that's cool. All right, let me ask you a question, because you've been asked this before. What do I do first? Do I go find a deal and then find the lender, or do I go find lenders and then find the deals?
So I always tell people you can do whichever you want. I've had people get lenders first, but I always tell people it does no good to have a lender without a deal. So get a deal, and it's also much easier to get the money when you show somebody a real deal. You know, if you're going there with thin air hopes and dreams, they're blowing you off like, yeah. Well, okay, thanks for buying me lunch, but come on.
Yeah, and I always tell them, when somebody says they got $100,000 they want a loan to you, don't immediately take it. Don't immediately jump into the deal. Give it a few days to let them know you're not that eager.
Absolutely.
And I always, and when you mention paperwork, when somebody says, "Here, I want to get $100,000 out," I never had any paperwork. The paperwork is the closing attorney's package. I just got them to give me an oral commitment, and of course, then we have to find out if it's their IRA. Because I don't know about you, but half the loans I made came from people's IRAs.
Yeah. And when I'm talking about paperwork in the course, we go over more than just closing paperwork. We have the credibility package and some other stuff to help you get those loans.
Got it. Okay. The paperwork is done by the attorney.
Yes.
And these things need to be closed with a professional and recorded.
And we never borrow anything without a title policy, ever.
Right. Me either. When you're doing cash deals, it's got to have a title policy, especially if there's a private lender, and fire insurance as well. And then the rest of the documents the attorney will prepare. Do you get appraisals on your houses after repaired before you borrow the money, or do you need them?
We've had some lenders that do require that, but we have a lot of lenders that we've done a lot of business with, and they don't require it because we've borrowed back and forth with them for years and years, and they've never had a problem. So a lot of our lenders do not require us get appraisals.
I would submit to our listeners that if a lender is asking you for an appraisal, it's your own fault. That means somewhere along the line you've created doubt, because anybody can go online today and pull up an address of a house and find out what it's worth.
Well, and you should be giving them good enough comps. They should not worry about it.
Right. You can get that on realestateabc.com or Zillow or tons of other properties. Not hard to find out what the market value of a house is, and they've got pictures on them, so not too hard for the lender to see what they're getting into. However, I know that when I started, I had to have an appraisal on every single deal I did. Nothing wrong with it. I wouldn't hurt to get it, but it's not a requirement unless you decide you want to make it a requirement. However, I wouldn't borrow somebody's money, nor would I broker somebody's money unless I was convinced of what that R really is. And if I had any doubt, then I would insist on getting an appraisal as a borrower or as a mortgage broker. So the money, by the way, in my case, the money never came. I never touched the money. It went directly to the attorney's office from the lender, and then the attorney distributed the proceeds. But in your case, you're actually borrowing it yourself, correct? And then lending it out at a higher rate?
Yes.
So does the money come to you from the lender?
We do it both ways. Once again, we've got people that we've worked with forever, so we give them the paperwork and they just give us the check. and they don't have to go to the attorney's office. They've worked with us for years and years. But we do have some new lenders that say, "Hey, I want to send the funds to the title company," and we do that as well.
All right. Well, you never did tell us. You probably ought to give us a little bit more description of what this course is all about, because we're about out of time here. I assume it just takes me step by step on how to borrow my own private money and if I want to become a lender. Is there anything in there about that?
So we don't have a lot of that in the course because we want people to get comfortable with borrowing private money first. But we do have a separate part of the course where if somebody is doing already getting a lot of private money and all that kind of stuff, they can sign up for our mentorship on the private money. And in that mentorship, we will teach them how to become a hard money lender.
All right. Well, we are about out of time here. So is there any last minute brilliant advice you could give our listeners before I turn you loose?
The only thing
be brilliant now, Mike.
Well, the most brilliant thing I have is just absolutely everybody, please remember, it's not about you. It's about the deals you're bringing. So bring good deals and you'll never look for money.
All right. Okay. Well, with that said, I appreciate you taking the time to spend with us on the podcast today. I'm sure you're a big value to a lot of folks out here, especially if you happen to live in the central Texas area. You got to look this guy up. I imagine they can find you at that same address if they go on the Mentor podcast site. Correct? Give me to me one more time, Mike.
One more time, it's thementorpodcast.com/PMCE.
That's Paul, Mary, Charlie, Edna.
Yes, sir. And if anybody wants to connect with me on Facebook, I'm more than happy to reach out. Always looking for new friends and learning from people on Facebook.
All right. Well, sir, thank you very much. Appreciate your time, and thanks everybody for tuning in. See you on the next episode of The Mentor.
That's all for this edition of the Mentor Podcast. To connect with Ron and learn how you can attain financial freedom, as well as up-to-date strategies to grow and protect your wealth based on today's discussion, go to www.connectwiththementor.com.